Okay, Aussie dollar here. Haven't looked at this in a bit, but you can see it pulled back relatively, perfect to this area with this candle here. Did it a little bit sooner than I thought even, so it's crazy the volume that we had on Thursday here. So pull up, completely rejected, so I mean that's perfect. That tells us everything we need to know. This would have been a bang on entry, but missed it. But that's all right. I mean, you can see that everything aligned perfect. So so yeah, I love looking back at charts and seeing that price did exactly what I marked it out to do, and it doesn't always do that, but it's really nice when it does. So now you can see prices right at this 65 level here, this nice whole number. You can see it rejected here many times, so 65 is very significant. But you can see you do have a candle going through it right now into this zone. It's still very bearish. I mean, there was no real pullback on this, just a little bit, but again, it was a Friday, so I mean, doesn't mean much. But it's cool to see it breaking through this 65 level and actually closing below it. We'll have to see how Monday opens and closes. So if Monday's candle is completely below the 65 level, then we're probably good to go to keep going. But if not, if it starts pulling back, then we're going to have to look for an entry point. Obviously, this area was super significant and respected, and so now what we're going to do is look for a new entry. And so our range for this pair is 375 pips. So our target area is 635, so it is below this area, but I think once it breaks this zone, then we're pretty much laughing. It's going to go right down to 63.5, and I think it definitely has that range in it for the month. You can see you got lower lows, lower highs, so this is perfect bearish structure. Price is still way below this 4-hour moving average, way below this 1-hour moving average, so the bears are definitely with us. My first area of entry would be right here. So something like this, perfect. And what you could do is even extend this zone just to cover these wicks as well. But yeah, this is a perfect area of entry if price comes back up, which I think it might. So in a couple things here, we can see that it might be easier to put this on a 1-hour. So if you look at this 1-hour little segment here, it tells a story. So price came down to here, never retraced, never came back up to 382 or 0.5 or anything like that. But and it still hasn't retraced. So there might be a retrace in this. And then this is our retrace area, right? So 382 to would be, if this is very bearish, which I do think it is, price could come up to this 382 level, and that would be it, which would be right above our zone here. So that's very reasonable. And if it does a deeper retrace, it would come up to the 50% area, which would just be, we would just widen this zone and just look for it, and basically this area would just have to capture these wicks as well in it, so which it's now doing. So either way, it's totally fine. This is my immediate interest, is this area here. If price pushes through it, then we'll go to the next one, obviously. And I mean, there is an area, it really just depends. I mean, this one is also very significant too, and this is between 50% and 618. So both of these areas I like a lot. So it just depends on where price gets stuck. If price gets stuck at this one, then we're gonna keep going, and I think it actually will get stuck at this one. And the reason being is because you already have these wicks here, these very significant wicks. You can see price broke lower and it's already made lower lows, so you can see there's already huge rejection in this area. So I think it is just more bearish than I think it's too bearish to consider. Again, I could be wrong, but it's too bearish to think that it's going to come back up this high. I mean, it could, but again, it already closed below this 65 level. So you got this 4-hour candle, and then that closed through it, and then the next 4-hour candle closed below it, right? And this candle, granted it was Friday, but it barely pulled back. So we'll see how this how this goes on Monday, or tonight actually, Sunday when it opens. But I mean, I'm looking to short this at this area, but if it blows through this area, then we just go to the next one. That's the thing. You never have to take a trade. You never have to force anything. If price isn't aligning perfectly, then you don't have to take it. You just sit on your hands and wait and look for the next one. But you can also see this 1 hour moving average catching up. And so once price hits this area, it might, it might be caught up and actually function as support for us, and then look for that downside, position again. So this is what I'm optimistic for, is this 65.22 kind of level here, for price to come back in. If it does retrace deeper, then we'll jump on that too. But as of right now, I'm going to set an alert because I think this is the area that we want. So it all just depends on what price does when it gets to it. If it blows through it, then we look to the next one. We look between this 50% and this 618, something like this, because you can see there's a bunch of wicks here, and you got these ones here. So I mean, it makes sense that price could go to the 50%, but I just don't think it's as likely. I think it's gonna get stuck here, but who knows? We will see come opening time, and then either way we'll just be ready. And then as soon as price hits this zone or this zone, then we just wait for the price action to align. We wait for those lower highs, lower lows to set in, and then we're laughing. And then make sure our moving averages all align. Make sure every single one aligns, right? Make sure price is below the 30-minute, even the 15-minute, right? If you want to make sure that price is below all your moving averages, so the momentum is just completely in your favor to the downside before you short something, that is totally good, man. I do that all the time to really just confirm my entries and stuff. And I mean, you'll lose a lot less trades if you are patient and just wait for everything to align and correlate properly, and you get as much confluence as possible. So yeah, that's Aussie dollar. We're definitely short to 63.5. We needed to break this zone. We're going to wait for an entry, a re-entry at 65.23, and then if we get it, we're going to take it all the way down to 63.5, which is the monthly range, which is 375 pips. So that is Aussie dollar.